Hello, my name is Ben Ashwell and I'm the editor of IR Magazine and Corporate Secretary. I'm thrilled to be joined today by Robert Fagin, who is Head of Research at Cowen and Company. And today we're going to be discussing ESG integration. Robert, thanks so much for joining me.
Thanks for having me.
Absolutely. So I'd like to start with a partnership that Cowen has with True Value Labs to provide an ESG score on all of Cowen's research reports. I believe you're the first Wall Street firm to do so. So I'd love if you could talk us through the partnership with True Value Labs and how that integrates with your existing research methodologies.
Sure. So part of putting scores on the front page of our research was to project a commitment that we have to ESG broadly at Cowen. But it also grew out of the fact that as our analysts were working on ESG related issues, there was no common language that we had in place that allowed for the comparison of companies within a sector or across sectors. So we knew that having that common language was going to be important if we were going to be speaking about ESG with each other and with clients. We spoke with many ESG data vendors. We ultimately chose True Value because we like the fact that companies couldn't lobby them for improved results. Everything is driven by their AI and machine learning process. For that reason, they are, in our view, far less susceptible to greenwashing or companies bending realities. In addition, a lot of ESG data on the market we found to be backward looking, and we like the fact that True Value system is real time. But the truth is the scores are just a starting point. They're meant to be the common ground for deeper conversations with our clients. They're not supposed to be a substitute for our analysts deep digging on ESG related issues. And so the way we integrate is that True Value provides a framework. And from there, our analysts are using their sector expertise to do deep dives on the ESG issues that matter most to our clients. And those are very often sector specific issues, such as fuel consumption in the airline industry or governance issues in the energy sector. And that's the way that we integrate it all together.
That's really interesting to understand. Thank you. And I think that, a lot of IR professionals and public companies in general get a little frustrated with feeling like a score is the be all and end all. And so that's helpful to understand. But sort of as you alluded to there, there are many data providers out there. The market for ESG data is pretty competitive. And so, in your view, I'd love to know sort of what role the sell side should play in providing ESG research and, whether you believe that should be integrated into the fundamental research process or conducted by a sort of a separate team of research analysts that are maybe ESG specialists.
So I think we're very early in the evolution. But that said, two basic models have emerged on the sell side so far with regard to approaching ESG. The first is standalone ESG analysts who generally opine on more macro issues or use a data lens to evaluate a large universe of coverage. The other is to have fundamental analysts include ESG as part of their focus. The model we've adopted at Cowen and the one that we think services our clients best is a hybrid approach. We use data, including the data we get from True Value, as a lens through which to view ESG issues. But then our analysts apply their industry expertise to the issues that matter most. So for example, if you're looking for an analysis of how the automotive industry plans to reduce reliance on fossil fuels over the coming 10 years and whether they'll be successful, we think fundamental analysts are far better equipped to supply an answer.
That's really interesting. Thank you. And so you've kind of alluded to this a little bit already, but I'd love to know how you think sell-side ESG research is differentiated from the raters and rankers that are so well known in this space.
So speaking only for Cowen, it's that integrated approach. We wouldn't expect clients to evaluate a company's ESG position solely on the basis of a score or rating. The same way we wouldn't expect clients to buy a stock simply because a company has a buy rating on the cover of our report. Scores are just frameworks and starting points. They're useful frameworks, but in our view, they are only the beginning of a conversation. And the buy side is becoming far more sophisticated in its approach to ESG. They're not going to use one or two data vendors to frame an entire decision-making process.
Well, I think that's a really interesting point because we hear from a lot of IR teams, the challenge to understand buy side methodology when it comes to ESG and which data providers they subscribe to and whether they have their own sort of proprietary methodology as well. And I think that's one example of where the sell side can really help issuers understand the way that some of their largest investors are thinking about ESG as well. But one of the ways that issuers can sort of control their narrative is, of course, through ESG reporting, and there's a lot of change happening in that space when we think about standards and frameworks that continue to pop up or are emerging and so on. Traditionally, the investment community has seen reporting as maybe a starting point, but has often coveted engagement and meetings as sort of the most valuable form of information, or that's at least often what I hear when I'm when I'm talking to folks. So I'm curious, what is your preference in terms of sort of reporting versus engagement on ESG issues? Because I feel like more often than not, we talk about the conversation is heavily weighted towards the reporting side.
Yeah, so I think having some standardized reporting will definitely be welcome. Right now, it's a little bit like the Wild West. You have disparate systems of ESG ratings or scoring, and they often don't correlate to each other. Um, Over time, I think that certain disclosures and importantly, the methodology for calculating certain metrics will be mandated by government entities, whether it's in Europe or the US, just as GAAP accounting standards first emerged in the 1930s in the US. But I do think it'll be a number of years before those kinds of frameworks are agreed upon. But I'd note that even if certain ESG disclosure standards are agreed upon, there will be sector specific metrics and data and information that holistic systems are not likely to measure. And that's because every sector will have its own metrics and performance indicators that are important. And from an ESG perspective, what's critical to railroads is not necessarily what's critical to biotech companies. There may be some issues like governance metrics that cut across all companies, but then there are sector specific metrics. And I think these sector specific metrics will ultimately be investor defined. In other words, the buy side and sell side will demand certain performance indicators to help them evaluate a company's standing within a sector. Um, but importantly, those metrics will represent a moment in time. And I think one thing for investor relations professionals to understand is that it will often be investor days or meetings with company managements that tease out the direction of those sector specific metrics and what direction they're headed in. And so if you provide a metric, that's where you stand today. If you take the opportunity to explain to the audience where those metrics are headed, in many ways, that's far more valuable.
Yeah, that's really interesting. And so to go back to the question about sort of reporting frameworks and standards, well, first off, I agree with you. We had a session at our recent ESG integration forum where we're talking about sort of the outlook for sort of regulatory requirements both in North America and in Europe, and I think that is it's not a case of if or when, it's a case of if, certainly. But I'm curious, in the meantime, whether your team has a preferred sort of ESG reporting framework or standard that you like issuers to use.
Not necessarily, although we do see that within certain sectors, there are some key performance indicators that are beginning to coalesce. But at this point in time, really no preferred reporting framework or standard.
Is it helpful for a company, say a company uses SASB or say they use GRI, they use one or the other? Is it helpful for them to explain why? Does that help sort of articulate anything? Say they say, well, we looked into both and we opted for SASB. Does it help you in any way to understand that sort of internal thought process?
Yeah, well, anytime an issuer coalesces around a standard, it's helpful because you know exactly what you're getting. And so, from that perspective, it is extremely helpful. The question is whether you trust that standard or whether that standard is complete enough to make your evaluation. Over time, I think that there will be enough stakeholders that whether it's SASB or some other organization, you will see some standardization that people will accept. But again, those things take time. There are a lot of questions and arguments about what should be included and what shouldn't be included. And that's going to take some time, I think, to work out and ultimately become standards.
Yeah, I agree. Um, so I think, as we think about ESG, I think, that the sort of whole capital markets is on a journey as we think about sort of ESG materiality and integration. If I think back to when I started writing for IR Magazine 5 years ago, we were having very different conversations with sort of all constituents about sort of ESG. And so I'm curious, in your view, what role can IR professionals play to make sure that sell side ESG research is as accurate as possible? And at Cowen, should IR professionals be speaking to sector analysts that cover them about ESG issues?
So I really think that investor relations professionals will be the tip of the spear and on the front lines in terms of representing their company's stance on key ESG related issues. If they aren't already, I think that IR professionals will need to get up to speed quickly on what matters most to the buy side and the sell side from an ESG perspective. I think it's critical for IR teams to build relationships with both the fundamental analysts on ESG issues, but also ESG analysts. Um, the most important thing right now is to be responsive regarding ESG issues. What's important to understand is ESG is a topic that matters a lot to IR's constituencies. And so making corporate heads of ESG and sustainability accessible to the investment community, when they're needed is very much appreciated. At Cowen, for example, we've hosted conference calls, fireside chats for our clients with the heads of ESG initiatives at companies like Walmart and the Gap and JetBlue, United Airlines. So that access is extremely helpful. We also think that it's important for IR teams to strategize about ESG outreach the same way that they spend a lot of time strategizing about non-deal roadshows. So many companies, for example, have begun to host ESG days or sustainability forums. Many have begun to include an ESG segment in investor days. Those are incredibly helpful to both the buy side and the sell side. And last, I would say that some companies have been very proactive about making quarterly or annual ESG metrics available to stakeholders. But again, as I mentioned, just as important, or perhaps more important, I think, is to ensure that a company's ESG pathway is clearly articulated and to provide specific goals and mileposts that investors can hold managements to. And sometimes the direction of companies' efforts is far more important than the current state of play.
Yeah, I couldn't agree more about IR being at the tip of the spear, and I think that it's really interesting in my seat. I think we can often see companies where ESG is fully integrated into the IR program as an investor relations issue, and that determines the way that the company discusses it and the way that it manifests in different events or disclosures. And then there are other examples of companies where they maybe have a very robust sustainability function, and the conversation is more from a kind of sustainability perspective, but there is less focus on materiality and what the investment community may want to know.
Yeah.
But to that end, I mean, there are some companies are beginning to discuss or think about adding ESG talking points to the prepared remarks on earnings calls. For instance, I think there are many companies that have been doing that for a long time, but just haven't been labeling it as like, here comes the ESG bit. But often when we talk about ESG, at least historically, we've been talking about sort of mid to long term issues, I think, which wouldn't necessarily fit on an earnings call. And so I'm curious about, in your view, whether you expect to see the discussion of more ESG issues on earnings calls, and if so, what questions should companies be asking themselves when they're preparing for the earnings call?
Absolutely. I do think that companies should uh, talk about ESG on their earnings calls. ESG is a driver of stock selection, and it's a factor governing institutional ownership of stocks. So I think it's completely appropriate for companies to provide updates on ESG related initiatives on earnings calls the same way that it would key operating metrics. Now, what should they talk about? IR professionals, by the time the quarterly earnings call comes around, will know all of the ESG hot button issues that the buy side and sell side is focused on. And there may be metrics that they could put together to begin to address that. And there may be sector specific issues that they'll want to address, whether it's reducing a carbon footprint or whether there's a governance issue. But they're going to be asked questions about ESG, and it is a significant factor in institutional ownership. So absolutely, it should be part of an earnings call.
Yeah, and I think, going back to your earlier point about, sort of ESG capital markets days, or thinking about ESG roadshows as well, and working with the sell side on those initiatives as well. I think the IR teams that are some way down the line of thinking about sort of ESG integration and how they need to change what they do, I think they're doing a really great job of tracking the nature of questions that they get based on the type of event that they're participating in, and whether the time horizon is different. And that, further down the line, that can help an IR team working with the sell side to think about, who participates in an event. For instance, if we get longer term questions on our ESG Investor Day, then maybe we want to have our head of sustainability. Whereas, if it's purely, let's talk about the next quarter on the earnings call, then maybe we don't need the head of sustainability. And so I think hopefully we see that kind of shaking out a little bit more. But I'd love to know, as a final question, how popular are Cowen's ESG research reports relative to other reports that the firm puts out?
Well, from a big picture perspective, ESG is by far the biggest macro topic that the buy side is engaging with us on. And I think it's telling of the millions of Cowen reports that our clients have read in the last 12 months. Among the top three are ESG publications like our ESG Best Ideas, our ESG Primer. I think that's very telling. And ESG and sustainability assets under management are just growing dramatically. The buy side is deploying significant resources to allow them to participate in that growth of assets under management that are being governed by ESG and sustainability. So by far, it's the largest single topic that the buy side is engaging with us on.
Excellent. Yeah, we see very similar with IR Magazine readership. But Robert, this has been really helpful to understand your process and how Cowen is thinking about ESG, and some recommendations for IR teams as well. So thank you so much for your time. Really appreciate you joining me today.
And thanks for having me. Appreciate the
Absolutely.
conversation.
Cheers. Thank you.